Hey guys, Mike here. So we got a huge week ahead with some major events happening this week. We'll be covering all of them in this video right here. And I mean, there are some big ones, okay? And understand the one thing you can expect this week more than anything else is going to be a whole lot of manipulation, a whole lot of volatility. It's going to be huge. And if it isn't, I'll be stunned, that's for sure. We're also going to take a look at some larger time frames. So we aren't just looking at this week or September, but what can happen really over the next weeks to months. Okay, so keep that in mind. But I will start off with the banks because, I mean, especially these regional banks stuff, but they are just, it's a hot mess of how they run these businesses. Okay, and we'll talk about why. But I mean, just look at this mess right here. Here are quarterly change in deposits for the banks. This is from FDIC. That's the source. And you can see it starting to stabilize. But this goes all the way back to 08, right? And we just haven't seen really anything like this. Maybe it happened in the 70s, but this is just insane, but it is starting to stabilize. More importantly, look at this right here. Unrealized gains and losses on investment securities. The dark color is held to maturity securities. The other color is available for sale securities. And I mean, look at that. Again, it goes back to 08. But these people, they were loading up. These banks were just loading up on bonds. And they are so underwater in these investments, they're going to have to try to hold them. But the bad thing is, and again, it doesn't matter until something happens, right? If some kind of credit crisis happens or something major happens, that's when you will absolutely see this have a huge effect on the financial market. But what's holding them up is what? This right here. The usage of the Fed's emergency bank funding facility jumped by $328 million last week. So they're still borrowing like drunken sailors right now because they have to. It now stands at a new record high of $108 billion. The current rate banks are paying for these loans are almost 5.5%. The banks that almost collapsed are now borrowing record levels of expensive debt from the Fed. And what you have to remember, the reason why they can be so underwater on investments and be borrowing like drunken sailors because they basically have to, is because, remember, for the executives who run these banks, there is no negative repercussions, guys. You've seen it time and time again. What happened to the banks that went under early this year? What were the executives doing? I showed it to you. They were just selling millions of dollars worth of stock before the bank actually collapsed. Okay, for the banks that actually got bought out by somebody else and taken over, I mean, you can guarantee these executives, worst case scenario for them, they just take their golden parachutes and they go home, right? I mean, they go home every day and their spouse says, how'd it go? And they go, oh, for the bank, it was horrible. For us, it don't even matter though. It doesn't matter whether they run these banks and to all the time do great things with it, or they run them in the ground, right? These executives make out like bandits. You saw it. I'm pretty sure it was back in 08. It was either Lehman Brothers or Bear Stearns. I can't remember which one it was, but it was the one that went bankrupt. How their CEO, I mean, the guy made $500 million in 8 years running the bank into bankruptcy. Okay, so he had 7 homes around the world. I mean, seriously, what was the repercussions? And so there just isn't any for these guys. Remember, they're the ones running, so it doesn't matter, right? Who's the one that suffers when banks go under or fail is the people that work in the branches and the people that have money in the banks, okay? And so and also the people who are buying the bonds and everything and investing in those banks. So that's the ones that suffer, not the executives that are running it, okay? Remember, like in 08, like they said, as long as you didn't admit to a crime or do anything shady, and I'm not saying that's what they're doing now, and so that's the kind of system we live in, and it doesn't matter until something bad, like catastrophic, really happens. But when you're holding those kind of losses on the books and something catastrophic happens, especially on a global scale, you can see why we could be in a real hurt locker, right? But what's the other one? They have Big Brother Fed, right? That's going to come in and bail them out. So again, it's like what we do with our children. What do we do with our kids? We bail them out, right? Especially when they're young. And so that's just the way it works. And so I can guarantee they sit around at those dinners and all talking to each other, probably laugh about it and say, don't matter, what we do. We're good. The employees may be done. The investors may be done. The people holding money may be out, but we're good. And it's scary when you look at that. And that's just us. Can you imagine what other countries are running with the losses as well, especially like China, which I showed you? I mean, it's some pretty bad stuff. So we just got to hope nothing bad happens. All right. This is why you cheer on China to get their stuff fixed and everything else, because they could absolutely cause some major credit event just all by themselves. So let me know what you think about down there in the bottom. Now, one thing that is going to be huge this week is we have quad witching September OPEX. So it's a quarterly OPEX. So this is when you'll have like volatility, which is going to be on a Wednesday when all these VIX options expire. You can see big movements in the market. It kind of frees it up, right? And then you'll have trillions of dollars in options expiring Friday. And so this is a big one. This is when you usually see some crazy movements in the market. You'll see some news come out to help kind of move it and make that the excuse for the movement. But again, this is when you start to see weird stuff. And I'm actually doing like a video for the members on Tuesday showing them this guy who actually called the last two blow off tops correctly, like to the day. And he's giving a prediction for the next blow off top to the day. And so I'm going to show that to them and stuff. So that'll be a fun one to watch, but it has to do with OPEX as well. Now, the dollar is another one. A lot of people think it's breaking out. That could absolutely be the case if it continues to break out and stuff, but it is overextended. That is for sure. And so you're seeing a lot of, bearish divergence on the RSI, on the MACD for this one. And so maybe it continues higher, no doubt. But again, look for this to maybe start to pull back at least to that trend line. But also, and understand this isn't a breakdown until not breaking that trend line. It's the one right here. When you scroll across like this, if it comes down and breaks that trend line right there, that's when you got a breakdown. All right, if you come down, obviously, through the first trend line and get a bounce, then this breakout can continue, which of course can be a headwind for stocks as well. So just keep that in mind. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And so that leads us into what are people looking for over the next few weeks, months, and also there's one more big event coming this week that absolutely either raise the markets up or sell them off, okay? And when you look at the NASDAQ, for example, this is the NASDAQ 100. A lot of people, you'll see them, they're drawing this cup and handle, which is a bullish formation. And they're saying, some people are saying, well, that's the handle, and you already got the breakout, right? And then some people are saying, well, no, what it is you got this cup, but the handle's still forming right here. And so it's coming down right here, and it's going to take a minute to actually come down. And then we'll maybe do a breakout at that point in time, which would lead us into the end of September, October. Because remember, this is a weekly chart here. So just keep that in mind. You do have that support level right there as well on the weekly chart, which it doesn't need to do. A lot of resistance right there when this tries to break above, because that is the all-time highs right there, right before 2022's crash. And when you go into S&P, you see the exact same formation right there, so you can draw that if you like. Another thing, though, looking at it, again, you can be short-term bearish and long-term bullish. We are still in this uptrend, whatever you want to call it, a pause rally, a new bull market. I don't care what title you want or tag you want to put on this thing, but that is an uptrend. And you can see, can we come back down and come down to that bottom trend line? Sure, that would make sense. Why not, right? But understand, you can see where we're bouncing, right? This is where I use the volume profile, but you can look plain as day. And so I say, look at the larger time frames as well, and you can see where we're bouncing, right? What's the next resistance? It's going to be right up here. And so we can move up, get rejected off there, come back down, bounce off that trend line, and then move up. But that's going to be your next resistance around 46, 44, it looks like, when you're looking at the S&P 500 index right there. And so again, and you can see how this moves, right? I mean, it comes up, that resistance gets rejected, comes up, consolidates, bounces, moves through the next resistance, comes back, retests. That's what you want to see. You want to see the explosion through and then get a retest. That's what's really bullish right there. See how it comes back down, retest, boom, bounces. And so that's what I'm kind of looking for. So if it does eventually break through that next level, let's look for the retest, okay? But is it going to make it straight up through there? Probably not. We'll have to see. But again, it sets us up for the fourth quarter. That's the key thing you have to keep in mind, okay? And so IWM, you can see with this pattern right here, again, sitting on a cliff right there around that 183 area. If that breaks, absolutely, you can see us going down to 177 with a quickness, just because that's how the IWM moves. Again, September is usually a rough month for it. We'll see if that plays out or not. The setup for the fourth, like I've said before, this is a terrible environment for small caps. Absolutely, it's a terrible environment. They are affected way more than the S&P stocks, the NASDAQ stocks, when it comes to these higher rates. So just, gotta think about that. Now, also Apple, remember they got a big day coming out here. Look at the chart, right? We're coming up on that 100. Are we going to get rejected or not and start selling back off? And a lot of things, you can see this right here is the daily. The MACD looks like it's trying to roll over and stuff. But what's really going to affect this one is going to be the iPhone event on Tuesday. Will this be a sell the news event? I've heard anywhere from $1,300 to $2,000 they can be charging this iPhone. So I can't wait to see how many people are buying that thing. My wife is an iPhone user. I am not. So I'll be asking her about this. Are you going to be paying $1,300 to $2,000? And it wouldn't surprise me after they saw what they were going to be charging for those goggles or whatever they call them. And so let me know if you're big into that one, because they do have a obviously loyal following, which we've seen them want to pay anything they want to charge. Now Tesla, watch out for this one, because the reason why everybody says this could set up for an explosive move is this bullish pennant right here, right? Again, it still has that 50 moving average, which has been a brick wall, that 1/60th area, absolute resistance. But if it breaks through, you'll see 163 of resistance and then explosion. And this is what they're talking about. This is a bullish pennant right here. If that looks just like Tesla's chart, does it not? And so let's see if this actually plays out. And yes, it can absolutely break down, so just keep that in mind. Now, Uber, which I don't talk about a lot, but again, when I see something like this is another one where people say, hey, it's formed this cup and handle, it's breaking out, it is at resistance, it's bounced off the 50 right there when it came down, forming the handle part. So that is bullish. If it breaks above that, absolutely going like 54-ish right there. And on the hourly, I mean, the RSI looks good, the MACD looks good. When you go to the daily, you can see some bearish divergence though, right? Where you're seeing moving higher, you're seeing bearish divergence on the RSI right there and the MACD. But then when you go over to the moving averages, the good thing for this one is it's respecting these moving averages. All three have turned up. You can see it bouncing off the 50, the 100, the 200. And so in 2023, it has not been below these moving averages. It's been bouncing off of it. So that is bullish for this one. Some people are playing Lyft on this because it's just a lot cheaper and it hadn't got its move up, even though Lyft to me is a much worse company. But still, some people like to do that. And so just keep that in mind when it comes to these. Now, this gave me a good laugh. I'm not saying I agree with it or disagree with it, but it's just two trash cans running down the road, and it says Disney and PayPal racing to see who can be the bigger value trap, right? And again, we've talked about this one. You see Disney, it did get that bounce right at the bottom. So we're going to see if it's finally getting this technical bounce. And when you look at its RSI on the hourly and the MACD, I mean, you can see some bullish divergence, right? I mean, it's saying the momentum's finally slowing down. Maybe there's been enough selling and stuff. But when you look at the larger time frame like a Disney, I mean, it really is a mess, right? I mean, this thing is sitting on a cliff right there to drop. Again, the RSI is not quite oversold on the monthly. This is the monthly chart, by the way, but look how far down the RSI has gotten. Look at the MACD, trying to curve, trying to get some momentum behind it. And when you just look at that, that is a clear stage 4 right there. Again, is it in stage 1? That's hard to say, to be honest with you. I don't think it is, but again, it's sitting at that COVID low, that 2014 low. Look at PayPal, same thing. How is that a stage 1 if it's still declining, right? Because it's in a declining wedge right now. Majorly oversold. And this is a monthly chart. This shows you how absolutely obliterated this stock has gotten since 2022. You see the MACD, it's trying to turn, move up. Again, there's going to be a lot of resistance as it tries to move through this gap once it gets up to like 66, 67 right there. But the hard part about these stocks is really just has to do with the sentiment, right? They upset a lot of people, just like Bud Light did, and the stocks do what they did, or companies do what they did. It upsets people, and they've been selling. They don't want to support them or anything. And so that's what's hard to predict about the turnaround, right? It could be you're looking for technical stuff to bounce, right? Not the sentiment, because the sentiment, you see people in the comments right here saying, I'll never go to Disney again. I'll never use PayPal again. For certain things, they did. Again, I don't get into that part of it when it comes to these companies. And it's one of those things where I know a lot of people that are accumulating to these prices, and it makes sense. You just don't know when the other part, which normally doesn't affect other companies when it comes to the political stuff of it, or whatever you want to call it, you don't know when that's going to end, right? That's what you got to see. And really, you just got to see when the hedge funds are going to be rolling back in. That's all you care about. You don't even care about us normal people, but just the hedge funds. Like, when are they going to start rolling back in and stop beating down these stocks, right? Now, when it comes to earnings, the good news is there shouldn't be anything moving the markets this week. Because when I look on this, I mean, Oracle on Monday after the bell, maybe you want to care about that one. You come over here Tuesday, I don't really see much. Wednesday and Thursday, you got Adobe, which people will listen to. Lennar, the home builder, Warren Buffett will definitely be listening to that one. So pay attention to those. Now there is a lot of economic news coming out though. Monday we shouldn't have anything that's going to be happening. The 12th, which is Tuesday, you'll have NFIB Business Optimism Index. Maybe there you got that one, but nothing much. Wednesday is going to be the big day. You have a lot of stuff about the mortgages, but more importantly, core inflation rate month over month, core inflation rate year over year. They're expecting a decline in the year-over-year from 4.7 to 4.3. Inflation rate month over month, inflation rate year over year, right? So we'll get, and they're expecting the CPI to actually go from 3.2 to 3.6, actually pop up while the core decreases. So keep that in mind. If you like oil and gas stuff, that's going to be coming out as well. Now, Thursday, that's when we get all the job data, and we'll get core PPI month over month and year over year, initial jobless claims. And then you'll get PPI, regular PPI, month over month, year over year. They're expecting an increase again in those. All the retail stuff's coming out, so people would definitely be paying attention to that one, and that could absolutely move markets, so keep that in mind. And then you'll come into Friday, really not a whole lot going on here. You have the New York Empire State Manufacturing, which you might listen to, and then, you know, the Michigan consumer sentiment, which, by the way, if the market's down, I expect this to absolutely be down. This is consumer expectations, sentiment, all that fun stuff, which really, I mean, doesn't do much to markets, to be honest with you. And so, in recap here, it's going to be a busy week. Obviously, with Apple's event coming up Tuesday, because if you've seen, when Apple sells off, the market sells off. When Apple recovers, the market tries to recover, okay? So just keep that in mind. Wednesday is going to be the VIX quarterly OPEX, and then we'll have the CPI data coming out on Wednesday. We'll have PPI on Thursday, and then Friday is quarterly OPEX, which is usually big stuff because we're talking about trillions of dollars of these options expiring and stuff. So the market makers will have fun. I expect some big swings throughout the days and stuff. But that's why I wanted to show you the monthly and weekly charts to show you not what's just happening this week, but over the next 4 to like 16 weeks as the market tries to set us up for the end of the year and stuff. So if you got anything out of it, please hit that like and subscribe button. I really appreciate all you guys. I'm going to go watch Chicago Bears hopefully beat the Green Bay Packers since Aaron Rodgers is gone now. So we'll see how that goes. So anyway, guys, have a great day. See you tomorrow.